Maybe starting with a question on a bit the longer term. I noticed that the terminal value is around 2/3 of your overall valuation. Of course, in the next year, they are launching a game. What makes you feel comfortable that in 10 years they can still launch blockbuster video games?
If we could just go to the DCF output. As you can see here, we strongly use the development cycles as the basis for the DCF. That's why it's 6 years. We, of course, as you already saw, the terminal value is 66.4%. However, the terminal value is based on the development cycle too. It's a very strong year of the release, followed by a mediocre year, followed by the worst year. Taking this into account, we still assume a 2-game approach, which is not very likely. If these games would be successful, it would be 3 games or more. So this is already the first very conservative assumption, that on the long term, it would mean they stay with the 2 strong games, and they keep this until forever, keeping in mind other assumptions that we made to the DCF, such as the growth rate of just 3%. If you have a look at this, these are the assumptions of other market analysts, strongly with a median of 8%, leading even up to 10.5% annually. And we decided to be very conservative in this part, due to the fact that the terminal value is quite a big part of our DCF. However, a 3% assumption is very conservative in our point of view, and can be very, very justified. Yeah.
So you mentioned the under-leveraged balance sheet as you see it. What would you like to see them doing, and do they have any history of acquisitions before, if that's the way you want them to go?
Sorry, could you rephrase the question?
It's like you mentioned that they have a very under-leveraged balance sheet. What would you like to see them do to leverage that up?
So if we could just go to the peer group. If you can see here, the peer group is having an average of 24% debt ratio. And only 2 of them, NCSoft and our company CDR, are currently at 0% debt. We perceive that right now it's a very, very safe approach. The management has quite unstable cash flows and had in the past, but now with the second game, this will be more flat, and they can handle this debt service. Yeah. So taking this into account, we think that a 24% ratio would be quite optimal for the company. And to achieve this, we think they should incur debt to expand, as mentioned in our real options analysis, to take further development locations, to increase the size, keep the quality, keep the highly qualified staff, take advantages of cost savings in Poland compared to the US, and be even more global than they are right now.
Yes, thank you. For the distribution business, is it just for their own products, or is it used for third-party developers as well?
It's also used for third-party developers. When we go to this slide, here you can see that they started with only 30 games, but at the moment they have more than 150 games and more than 200 partners. That means that it's not only their games, but pretty much everything you can find on the market.
Okay, and my other question is, in this kind of business, how frequent do they need to develop new games on average?
For the game development segment, yeah?
Yes, I mean, apparently the product life cycle for each product could be short or long. So how frequent do they need to keep launching new games?
Since we talk about role-playing games, it's the most expensive kind of game. That's why the entry barriers are very high. According to management and according to, for example, Activision Blizzard goals, one of the peers, they always plan a 3-year cycle. The last time they did not manage to do that, the last big release was in 2011, but they had the second game worked on simultaneously, so it's quite understandable. That's why we think that the 3-year approach that we took for the cycle 1 and cycle 2 is still justifiable. And taking one of the mentioned competitors, for example, into account, Bethesda and Elder Scrolls, they released this game 2011, and there's right now a large gap, and the next one is expected in 1 to 1.5 years. So right now, in general, the market is very uncompetitive and very favorable. Yeah.
How do they price the release of a new version? How much does it cost?
DCF assumption, please. Oh no, sorry, sales forecast. Yeah. So basically, it's a pretty standard price waterfall. An average dollar price of 60 in the beginning, trying to keep it up as long as possible with this new version. It's the biggest marketing budget, so it's going to be a bit longer up there. Yeah. The other one was also starting lower. The first title only at $40 average price. The second one at 50. Even dropped very fast. Then was boosted back up with an enhanced edition. This will not be the case this time. So we assume a pretty standard price waterfall, leading to a forecasted monthly net receipts, of course, the highest around the release. But, of course, this is the trigger for our unit sold figure, which is for The Witcher 3, 11.3 million units. Cyberpunk trading at a discount, since we don't really know where they go right now. This is a huge upside potential. And the other games in the similar range. Of course, this doesn't affect all the same financial years. Most of them incurred, like The Witcher 3 just incurred in 2015 with the highest sales, and the other one according to release dates that we previously mentioned. This might be perceived as not that conservative, but I would really like to show you the market point of view, since this is just project driven from our company. But as you already heard, we have mature customers that have high disposable income for a game that's on average $50–60. So there's not that high competition. They can buy all the competitors' games. And additionally to that, the releases are quite limited. So taking that into account, some analysts said the new gen of consoles is the end, yeah? The last generation was the last one that really sold well. If you look at this slide, this is proving quite the opposite, yeah? The development in the first 61 weeks is very steep compared to the development of the last generation, which highly suggests that the install base reached new highs. And if you come from this point of view, the unit sold figure, taking a few assumptions like per console 4 to 4.5 games per year, which is a very conservative figure, would reach with a 7 to 8% market share of role-playing games, already 4.8 million units purely on consoles for The Witcher 3. So the consoles will be the strong boost of the upcoming title that justifies our assumptions.
Are they very dependent on a small number of developers?
Small number of developers.
Individuals, or is the business very dependent on a small number of individuals that could leave?
I'm not sure if I get the question.
Basically, the headcount is pretty basic. The majority of employees is developers, 250 out of 400 total, as you can see here. The 100 people in green are just the GOG sales people, so it's the lowest value added, while the 250 people are the highly trained staff. And it's one of the key assets of this company. Yeah. So you can say they are very dependent on these 250, and it might take time to train additional staff, but it's already, in our point of view, the majority of the company, and it's not such a small group that if somebody gets sick, the game is delayed. Yeah.
And already that because the management is so passionate about the gaming also, and the whole company is about gaming, it also attracts people from all abroad. So 100 people from all these 400 people are coming from abroad, especially to work on this company. So it's not really a big threat to get these people attracted. So that's why it's not a problem that they are dependent on these people, but it's rather nice to know that they will get these people for sure.
Yeah, and if we also compare the cost of employing people in Poland, really good developers who are really skilled and also well perceived abroad. For example, to US, where majority of the competition is coming, we can also see that the cost is more or less 1/3 of the one in US. So it is also a huge advantage of this company compared to its competition. We can, for example, have a look at this slide, and if we compare the development budget of The Witcher 3 to development budget of the biggest, in our perception, competitor Skyrim, it's $15 million US compared to 35 of Skyrim. So actually it's a huge advantage of the company.
And additionally, the marketing budgets are in the same vicinity, and the marketing budgets do not come from our company that spends some crazy money, but it's from the retail partners that are willing to spend this much. So this is also a strong sign, a strong indicator of how successful this game can become. If we could just go to the